All right, it's time now for a look at the day's business news, where economic issues will feature prominently when South Korean President Yoon Suk-yeol visits Washington later this Monday. One issue that will get particular attention then is that of memory chips. Charles Pellegrin, our business editor, is on set for more. Hi, Charles.
Morning, Erin. That's right. Memory chips are an essential component in today's economy and can be found in TVs, phones, and many other places. South Korea is home to two of the world's three dominant players in this sector, Samsung Electronics and SK Hynix, the third player being an American company called Micron. Now, according to the Financial Times, the United States is asking South Korea to make sure its two leading chip makers don't try and fill in the gap left by Micron in China if that company ends up being banned by Beijing. Chinese authorities launched a probe into Micron last month in what is believed to be retaliation for U.S. export controls imposed on advanced chip technology destined for China, all of which is part of that superpower tech rivalry between Washington and Beijing. And a potential ban of Micron in China could be taken advantage of by its South Korean competitors, with high stakes of Micron's $30.8 billion in annual revenue. A quarter of that comes from mainland China or Hong Kong. The American request would be a first for South Korea. So far, efforts to counter China have mostly been centered on security issues, not on economic ones. And while Samsung and Hynix won't like to see opportunities for more business in China blocked, the U.S. does have leverage. As part of its export controls on chips, it gave waivers to South Korean companies with production facilities in China to continue to ship to the international market from there. And from one key component to another key material, lithium. Lithium is an essential part of the batteries that power electric vehicles and therefore are crucial to the development of a more sustainable economy. Chile is one of the world's biggest suppliers of the metal, and it announced plans to bring its lithium industry under state control, partnering with private companies to enable its development. Yinka Oyatade has the details.
The global demand for lithium continues to grow, and Chile says it wants more control over its stock. The South American nation has one of the largest lithium reserves in the world, and is now looking to nationalise the industry, a move the president says will not only further develop Chile, but also help the environment.
The state will participate in all of the minerals production cycle. For this, we'll create a national lithium company. In addition, we'll work towards the use of new lithium extraction technology that will minimize the impact on the salt flats ecosystems.
Chile holds some 9.6 million tons of the metal, far less than Argentina or Bolivia. In spite of this, Chile is the second largest producer of lithium after Australia, which cultivated 61,000 tons last year. Lithium is crucial to powering up electric vehicles and is therefore key to the fight against climate change. The price for battery-grade lithium inflated to $85,000 a ton in December. It's since dropped by 50%, this as the demand for electric cars fell in China. But the appeal for the world's lightest metal remains high. Experts say the demand will balloon to 3 million tons by the end of the decade, from only 300,000 tons in 2020.
Let's take a look at the stock markets now. After Wall Street posted a weekly decline last week, we're seeing trading in negative territory in Europe at the open this Monday. The Paris CAC 40 down 1/3%. The FTSE in London down almost 0.5%, and the DAX in Frankfurt down just over 0.1%. Similar picture in Asia, with most indices trading down, except for the Nikkei in Japan, which is trading just above the flat line as it closed, up 0.1%. We're seeing the Kospi in Seoul down almost 1%. And it's the end of the line for U.S. retailer Bed Bath & Beyond. The store, which sells sheets, towels, and kitchen appliances, among many other items, filed for bankruptcy on Sunday and will wind down its operations, aiming to close down all of its stores by June 30th. It's seeking buyers for all or some of its businesses. Thousands of jobs are at risk. The company employs 14,000 workers. Bed Bath & Beyond never fully recovered from the pandemic when it failed to develop its online store and suffered with supply chain issues. And let's end with a look at a new report on the evolution of business air travel. It seems like the days of expensive corporate air travel might slowly be coming to an end, or at least won't be coming back to its pre-pandemic normal. Tighter budgets at companies and newfound comfort in using virtual meeting tools like Zoom are huge contributing factors. The typical business traveler now is younger and makes less money, with half of them making less than $50,000 a year. Another factor at play, Aaron, moving forward, the drive for sustainability also means companies making efforts to limit business travel by airplane, at least.
That is certainly only good news for the climate crisis. Charles Pellegrin, thank you very much.